All right. Welcome, everybody, to Breaching the Boardroom. I am your host, David Morrow. And in the studio today is Devin Murphy, CEO of Phillips Edison. Devin, welcome to the studio, sir.
David, thanks for having me.
Well, I appreciate it. So, share with us a little bit about your organization so that everybody kind of knows what all you guys do. And then I know you and I spoke earlier, and you've got a really interesting story. So, I'm going to kind of lean into that a little. So, walk us through it.
Okay. Um, well, I'm a board member of Phillips Edison. I retired as Phillips Edison's president last July.
Correct.
Phillips Edison is one of the nation's largest owners and operators of grocery-anchored shopping centers in the United States. We own a little over 300 centers in over 30 states. The company has an enterprise value of north of $7 billion. We have partnerships with a number of institutional investors over time, including TPG, Northwestern Mutual, Cohen and Steers, and others. We took the company public in 2021 on the NASDAQ, and we're an S&P triple B rated company. And we have a little over 300 employees. Most of our employees sit in our Cincinnati office, but we also have offices in Atlanta and Park City, Utah, as well as other locations around the U.S.
That's phenomenal. So, when you guys took it public and you went on the NASDAQ, did you go to the event? Were you there?
Oh yeah, it was
We will pop up some videos or an image of it, like right here. That's always exciting. I've been to those. Those are really cool.
awesome. I mean, yeah, that was definitely a bucket list item for me. And one of the decisions that we had to make at the time of the IPO was whether we were going to list the company on the Nasdaq or the New York Stock Exchange.
Right.
Most real estate investment trusts are actually listed on the NYSE, not Nasdaq.
Right.
But as we did our research, we felt that Nasdaq was offering a compelling opportunity relative to the NYSE. And even though most of our peers were listed on the NYSE, we made the decision to list on the NASDAQ. And we've been very happy with that decision and feel it was the right one.
So that is a pretty remarkable bucket list item to hit. And that's an incredible career. So you grew up in a big family, as I understand, big Irish Catholic family. Did you know you always wanted to be the head of a real estate trust company when you were a kid? I don't think so. So, like, how did that? I understand you were thinking of being an attorney when you were younger, but like, how did you get into this field particularly?
Yeah, I'm the oldest of five kids, and my dad was an attorney. He was general counsel for one of the big railroad companies, Penn Central.
Oh
And then
yeah.
ultimately, he went into private practice and was a partner at Hunt and Williams. And so when I was in college, I was basically just looking to follow in my dad's footsteps and be a lawyer. And my senior year, I was working on my honors thesis, and all my friends were down in Florida on spring break, and I was in the library finishing up my honors thesis.
Yeah,
And
I
I
did.
had,
I spent my 20s doing that, missing out on everything. And
yeah.
you were like, I'm going to be smarter than Morrow, and I'm going down and I'm going down there, didn't you?
Well, I had a conversation with my dad when I was whining about being in the library, and he said, "Look, if you're burned out on academics, don't go to law school because in law school it's all about doing well your first year, getting on law review, etc." And so I was fortunate to have an offer to go work for Procter and Gamble in Cincinnati as a financial analyst, and took my dad's advice and deferred my law school admissions, and went to P&G and never looked back. I'm really thankful that I decided to pursue a career in business and not go into the law. I mean, obviously, over time, I've spent a lot of time working with lawyers,
Oh,
and
of course. Yeah, yeah, yeah. And the study of law is brilliant. Like it's fascinating. There's no doubt. But being forced to do it when you're a kid is like it takes that's some grit. You know what I mean? Like that's a sacrifice for sure.
yeah,
So really interesting. So you took that pathway and you began as a business analyst, but you like in college you weren't studying to be a business analyst, right? Like
no, I
it,
was a history English major,
yeah,
and fortunately, P&G is one of those companies that is willing to hire the best athlete, if you will, and then train them accordingly. And so that's the path I took. And I worked in the credit office at P&G, where I was responsible at the time for doing credit analysis on about 10% of their annual sales, which at the time was about a billion five. Now, this is going back to the early 80s, so it's ancient
yeah,
history. But what I learned during my 2 years at P&G was that I really needed to enhance my financial acumen, and therefore went back to business school, and got my MBA from the University of Michigan. And from there I went to the street when I graduated from Michigan in '86.
yeah. So it's I think there's a lesson there for people, and that is even though you like when you, well, let me ask it this way. What drove you to accept the business analyst role? Was it because it was P&G and it was a really good organization, right? I would assume.
Yeah, yeah, it was the bottom line. Yes, I
Yeah.
mean it's
But
just a
that's a
great
good
opportunity.
lesson. It's a good lesson, isn't it, for people that are like, well, maybe my goal or my dream is to be in this role at the organization, but be open to starting anywhere, right? And learn the culture, learn what it would take to get to that, right? You might not get it right out of school, but you can get the building blocks and each time be able to, open those doors to do it.
I completely agree with that. If you're a talented individual, and you start with an organization and a part of the organization that you do not want to be in ultimately, but if you prove that you are a talented individual and a hard worker, then express an interest in moving into another part of the firm, they'll accommodate that
Absolutely.
request.
Yep. So after getting your MBA, you went down to the street. Did you stand in the pits? Did you trade or were you because I did that for a number of years and then technology came and now it's all behind desks
Yeah,
anyways. But that was exciting back in the day. I mean, there
yeah.
was
I
and the
was an
movie Trading Places came out like it was good living. It was
yeah,
great living. Like
yeah.
there's
No, I
nothing
was I was a banker.
uh
I spent my time in investment banking. Now, I did spend several years on the capital markets desk at Morgan Stanley, and the
oh
capital
okay.
markets desk is the interface between the investment bankers and the sales and trading team. And so typically, when a company is in the market raising capital, the deal captain, for lack of a better word, is the person on the capital markets desk. And so I did have that role. I did sit on the trading floor. I did do that for a number of years. I enjoyed it. But again, capital markets at Morgan Stanley, at least, sat within the investment banking division
Right.
of the firm.
Yeah, absolutely. So through your trajectory, and you've had a really respectable career. That's exciting. What you had to have come across some examples, and I'm not even talking about yourself, but you could even draw on your own experiences, but of like examples of really good leadership. Like what can you share with us based on what you've seen? because you've seen things that many people will never see.
Yeah, I mean, I think there's a handful of characteristics that are typically found in, what I would consider good leaders. I think number one on that list, David, is integrity. I think, you need to have integrity that engenders trust. And if a team has trust among its members, it can be successful. Another characteristic is what I call, self awareness or humility. I think you need to be willing to listen as a leader, and you need to be open to different ideas. Over time as a banker, I had a number of clients whose CEOs did not exhibit this self awareness or humility aspect that I'm talking about.
Yeah.
And typically those organizations were afraid to speak up, let the CEO know what they were thinking. And quite frankly, those organizations typically were not very successful organizations.
Right. If they're
um,
still around today, right?
Neither one of the two that I can think of are still around.
And see,
They're both.
that's really significant, right? Because you need to create a culture. If I'm understanding you correctly, there needs to be a culture where the leader is exhibiting integrity, meaning doing the right thing even when no one's looking, right? And leading by example. And then people need to be able to challenge those ideas, because the organization could be flying toward a mountain and crash. And if everybody's just being a yes person and agreeing with the leader out of fear, right? We know why they're doing it, but out of fear, then nothing's going to change the trajectory of that flight, right?
Exactly.
Yeah,
Exactly.
interesting. That's
And
that's
no one individual can have a monopoly on the right things to do.
mhm.
And if you're not willing to listen, you're not going to get the benefit of that. Some other characteristics of good leaders that I've seen is courage. I think good leaders need to have courage. When you're running something, you're often in a position where you have to make a really difficult decision, and you're being asked to make it without having all the information that you would want to have at that point in time.
Yeah,
And so, you need to have the strength of your convictions, and you need to have courage to pull the trigger and make that decision. And I've seen the opposite of that is when you have a leader who isn't willing to exhibit courage and make that call. The decision doesn't get made, and the opportunity gets missed.
that's
Um, so
yeah. That is so. That's really really impactful. Um, there's I saw somebody, and a couple things that you said resonated with me. First, in Steve Jobs, the autobiography about Steve Jobs, it talked about how he would always say, I want to hire really, really smart people and not tell them what to do, but I want to listen to them. Like, there was a reason I hired them, right? Like, I want to hear and I want pushback for my ideas, especially a guy like him. He's like super creative, and he was like coming up with like, who knows what we would have if nobody told him no, right? Like thank God they did. Um, but that's a really good point. Um, and then the other aspect of uh, integrity. I think one of the things that I hear people ask a lot is how can they know? Like, how can they know when a leader is a good leader, and they're not just being told that by the yes people around the leader, right?
yeah, yeah,
Is
I think that comes through in how the leader acts. And what I characterize it as is the ability to be compassionate. And what I mean by that is, one, you're willing to listen. Two, you're willing to listen and therefore learn. But then, most importantly, is you follow up on what's been communicated to you. And I think if and this goes back to my, integrity point, which is if you have integrity, and you're listening and you're learning and you're following up, you're going to engender trust in the team. And, the team will then, do what you're asking them to do in those difficult situations where, it's not crystal clear what the right thing to do is. So I think that's how people engender trust, which is they see, how does the leader respond when I have a conversation with him? Is he willing to listen? B, is he willing to learn? And then C, does he follow up and, in essence, do what he says he's going to do? Or is it just, he shakes his head and, we go back to
The way it
where
always was.
exactly.
Yeah, exactly. So as you were migrating your career, did you have mentors along the way?
Definitely. I think that I had a mentor when I was at Morgan Stanley. So I was a banker for almost 30 years, and I spent 25 of those 30 years at Morgan Stanley. When I retired from Morgan Stanley in 2013, I was a vice chairman of the firm, and one of my mentors there was one of my bosses earlier in my career before I was a managing director. So probably 15 years before I left the firm. So sort of halfway
Mm-hmm.
between my term there. And, he gave me a lot of good advice, and, was very direct and in his feedback. He would tell me, look, this is what you're good at, this is what you're less good at, this is what you need to work on. And I think that a lot of people don't like to hear things that they're less good at, and the bottom line is everybody has things that they're less good at. It's just the way it is, and you're never going to get better if you don't, a, those things aren't pointed out to you, and then b, you don't spend the time to work on them. So that was what I really appreciated about my mentor was, he was willing to be very direct and let me know, things that I could do better and needed to work on. And, that definitely made a difference for me.
That's really key. I'll tell you, I think I mentioned this earlier when I interviewed Chris Voss, the author of Never Split the Difference, when he was a Kansas City police officer applying for the FBI, and he wanted to be in the hostage negotiation unit because he thought it was really cool. He knew somebody who did it once and it was really cool. He's like, I want to do that. And he went and applied and he got rejected. And he said, what can I do? Why did I get rejected? And they said, go volunteer on a suicide hotline and you'll understand empathy, not sympathy. You'll understand empathy. And he went and did it and came back to her and said, I did that. It's like a year later. And he goes, now I'm reapplying. And she goes, you did? And he goes, what do you mean? She goes, I've told over 100 people to do that and nobody has ever done it. And he has this whole thing about mentorship, how people seek mentors, but then don't listen to them and don't go do what they're saying to do, even though the mentor literally is walking the path that you want to walk down, right? And you're like, if you're not going to do it, that's part of the problem, right? Like it to gain the value of mentorship is, and you just demonstrated it. You just said, I went and I listened and I went and adjusted things because I learned what I needed to improve on and I learned what I was doing well. So you double down on what you're doing well and you make adjustments for what you're struggling with.
Yeah, exactly. And I think that's another characteristic, David, of a good leader is someone who, shows what I call resilience. They effectively meet challenges and setbacks. And I mean, look, the bottom line is in business, you are going to have setbacks. It's
A
inevitable.
hundred
Everything you
percent.
do
A
is
hundred
not going to
percent.
work.
Yeah.
And the key is, to learn, from those setbacks and grow from them. And then
Yeah.
hopefully you don't repeat the same mistake twice. But,
Right.
in the example you're giving, that person was willing to take advice, learn, and therefore got to where they wanted to be. And again, I just think that's what, good leaders exhibit, which is, an ability to learn from their mistakes and grow from them.
That's just absolutely phenomenal. What what are some of the ways? One of the things whenever I'm talking to people in leadership, one of the things that amaze me is their ability to get people to do things in a positive culture. Because you'd think the most positive culture is like, don't you worry about anything. We're all going to be fine. Don't worry. Like that report that was due, it's okay if it's late. Right. But that's a good culture, maybe, but stuff's not getting done. Right. So, how do you do that and still do it in a positive cultural way?
Yeah.
Any ideas on that?
I mean, I think there are three key points in that regard. I think number one, you need to be able to effectively communicate. You need to, transmit your vision and what the necessary steps are to accomplish your vision are. And then and communicate it to all constituents in a way that all constituents will understand, because the C-suite will understand the message in a different way than your entry level employees. So you have to make sure that all constituents are understanding the message, and the message needs to be reasonably simple, and you then need to continue to communicate it on a regular basis. um, and so that would be number one: communicate the vision. Then number two is be a team player. Work effectively across multiple constituencies so that everyone in the organization sees that you are a team player, you're doing what's necessary for the team to win, and you're willing to potentially sacrifice some personal objectives in order to meet the objectives of the team. And then lastly, and most importantly, David, I think it's show gratitude when a team member goes above and beyond the call of duty and is doing what you're asking them to do to meet the objectives that you've communicated. Say thank you. And you know what? Say
Acknowledge
it as
them, right? Yeah.
exactly, acknowledge them, and say it as often as possible. It has amazed me over my career how little you actually hear thank you in a professional environment. You just don't hear
Yeah.
it that often.
It's
And
true.
it's so easy
Right.
to
Costs you
do,
nothing.
costs you nothing.
Right.
The return on investment is exponential.
Yes.
And it's just such a simple thing.
Well,
Now,
and with advancements in technology today compared to 20, 30 years ago, right? Like there's pretty organized ways of showing that. Like there's rewards programs and there's kudos that can be done internally and things like that. You can put their name in spotlight, right? Like internally pretty easily now with apps and add-ons and like the systems that everybody uses. So
yeah,
there's really almost no excuse not to, really, when you think about it.
that I agree with. I mean, I know we use one of those programs at Phillips Edison, and
Yeah.
I'm amazed at how enthusiastic the employees are about it. But in my opinion, it's a lot more impactful if a member of the leadership team, says to someone on the finance team, after they've done an amazing
Mhm.
job on something, you know, after the meeting, just pull them aside and say, hey, that was a
Yeah.
great job. Thank you. That's all you have to
Yeah.
say.
Oh,
And
100%. Like that human to human contact when the situation arises. Absolutely. I just
Exactly.
meant more like if you're not with them directly, you could
Oh, no,
still
no, no.
do it. Yeah, you
Don't
could still
get me
do it,
wrong.
right?
Those programs have been, I've seen them be very effective
Yeah.
for us. And no question, no question.
Yeah. That's phenomenal. So what's on the horizon for you? What what are you let me give a little context for the listeners and the viewers. Um your organization, when you think about, you mentioned a lot of the grocery that are out there, that when you think of the Krogers and the Albertsons, and they're huge, and I know they just tried to merger, but then everybody's like, hey, one group in charge of our food supply, maybe not, so they kept them separate for now. Maybe that'll
Right.
come back, who knows. But like, you guys manage all of their real estate? Is that how it works? Like, what, how do, like,
Well, we
walk
own the
us through
shop.
kind of.
Yeah, we own the shopping center, and you mentioned Kroger. Kroger's our largest tenant, and we're Kroger's largest landlord.
Got
Um,
it.
but but Kroger has, you know, I mean, we maybe have 70 Kroger stores in our portfolio, and
Right.
Kroger has 2,500 stores around the U.S. So
Right.
again, it's just a small handful. And so typically, in our center, our average center is 115,000 square feet, and that grocer is 55,000 square feet. And then the balance of the center is made up of individual tenants that typically average 2,500 square feet. And those are names like Starbucks and Subway
Yep.
and UPS,
Right.
etc. And so Kroger in that situation pays us rent as the owner of the real estate.
Got it. Got it. Well, that you simplified it down, so that was really good. That's fantastic. So walk us through what's on the horizon for you
Yeah,
personally, and then for the organization.
yeah. So I think Phillips Edison is continued to be in a very strong place, and I think will continue to grow via acquisition. I would expect to see the company grow from a $7 billion enterprise value today to a $10 billion enterprise value in the next several years, and they'll do that through continuing to acquire shopping center assets all around the U.S. And I'll continue to be involved there as a director. Um, I sit on three public company boards. In addition to Phillips Edison, I sit on the board of a company called Macerich, which is an owner operator of enclosed regional malls
Hmm.
around the U.S. That's about a $12 billion enterprise value business. And then a company called Core Civic, which is in the detention business. We are the
Oh,
largest private owner of detention facilities in the U.S. So
that's
those
a
are,
whole other podcast. That's a
wow.
whole other discussion.
Oh, yes, it is.
Yeah.
Yeah, yeah. I've been on that board since 2018, and
Interesting.
it's been a very interesting learning experience for a lot of
Yeah.
reasons.
Right.
I also am a senior advisor to a venture capital fund called Fifth Wall Ventures,
Oh, of
which
course.
is the largest venture firm focused on the intersection of technology and real estate. We have about 3.5 billion in assets under management today. We have investments in approximately 150 portfolio companies, and that's been interesting. And we've recently started a broker dealer, and are beginning to advise companies on capital raising and mergers and acquisitions, etc. And that's typically where I focus because given my 30 years as an investment banker, I can add a lot more value there than I can on the venture fund side of the business.
Yeah.
um, and that's what keeps me busy. So
Yeah, that's phenomenal. Fifth Wall, we're very familiar with a lot of the players in Fifth Wall in the cybersecurity space and the IT space,
yes,
because they have a lot of programs for cyber insurance, for underwriting, for advising. So it's they do a remarkable job. So
Yeah, it's been a fascinating experience. I mean, I'm sure as the venture world is difficult currently, because there's been a dearth of IPOs, and therefore it's been difficult for the managers to return capital,
Right.
and because it's been difficult to return capital, it's therefore difficult to raise capital. So it's a difficult environment in that regard. I think from an investment perspective, it's probably as good an environment as there been in some time, because my experience is when there's not a lot of capital to be invested is when you want to be investing,
Right.
which is right now. So
Yeah.
we're excited about the opportunities that we're seeing there.
Let me ask you, have tariffs played a had an impact on the Phillips Edison role aspect at all? I one would think not, but maybe through the importing of certain food items, it could affect it something like indirectly. I was just curious.
Yeah, no, I mean, look, it's a very good question. And, in our Q1 earnings call, we got a lot of questions from investors about the impact of tariffs on our business, and what percentage of our rent roll did we think would be negatively impacted by tariffs.
Mm-hmm.
You know, we portray our portfolio as necessity retail. So it's obviously grocery, and then food, and then services. So haircuts, nail salons, uh, a primary care, dental, etc.
Right.
Our view is that approximately 85% of our rent rolls will not be impacted by tariffs. And tariffs will impact about 15%, but not in a meaningful way. The components of retail that most people expect to be meaningfully impacted are furniture, apparel, footwear, electronics.
Yeah,
And
technology. Yeah.
exactly. And if you look at our portfolio, knock on wood, we have de minimis exposure to those categories. So
Right.
we're not, terribly concerned about tariffs. What concerns us is if the tariffs create inflation or a recession or
Of
some
course.
negative consumer event,
Then
then we're
you'll
going
be
to
affected by the fallout like other organizations.
exactly.
Right.
If the consumer wobbles, it's clearly going to have a negative impact on us, and you're already starting to see it. When McDonald's had negative, same store sales growth last quarter of about 4%. So the consumer is becoming more cautious. And the Michigan consumer survey was meaningfully negative most recently. So that's what concerns us, which is if this whole tariff fiasco, for lack of a better word, creates wobble at the consumer level, and it's hard to imagine it won't. That
What
could
do you
have
think's driving that? Is it just uncertainty?
yes. I
Yeah.
think it's
Because
uncertainty.
uncertainty, just that fear just paralyzes people. And then they're like, I'll just wait a week or I'll wait a
Exactly.
month before I make that purchase, or I'll just hold. Right.
Yes, and also the volatility in the capital markets obviously creates
Right.
fear.
I read
Um,
somewhere that the capital markets, a lot of the sell off was institutional rather than individual. Is that
yes.
pretty accurate? Okay.
Well, that's what I've read as well.
Yeah.
Yeah, that the big guys were selling and the retail investor was buying. That's what I. And then there's all kinds of commentary on hedge funds repositioning
Right.
their portfolios, blah blah blah. And again, I'm not close enough
Yeah.
to all that to have a point of view, but the interesting thing about tariffs is um, where are we going to be if we don't get clarity here quickly come the holidays? Because you can't turn on these supply chains overnight.
Right. And that
And
is still when what, 60 to 80% of all the transactions happen. Like
Yeah.
it's still very calendar based, and
Yes, it
everything
is.
happens around those holidays.
Yes, and I'm not close enough to know, the reality of this, but there's some speculation that you're going to start to see shortages showing up here on certain items here pretty quickly. So we'll see.
Well, I'm
I
just going to
just
talk to the landlord of my grocery store and make sure that they've got my stuff that I want, right?
Yeah,
I'm just going to call you.
you're going to
Like,
have to worry about most of your foodstuffs. I mean, it may get more expensive,
right.
in certain things like coffee,
Mm.
etc., may get meaningfully more expensive. But I think you'll still be able to get it. The question is going to be, what's the price going to be?
I mean, the fundamental theory behind it, though, is for the last 30 odd years, we have become the nation of consumers and not manufacturers. We
Correct.
just basically outsourced everything, offshored everything, and now it's not sustainable for us. Like it's right in theory, and so
Yeah.
we need to bring some of that back. This is one approach to doing it.
Yep.
Um, you know, we can all debate on, could we have done it in phases, ease this in, right? There's probably a couple of different, you know, debates that can happen. But uh,
Well,
what,
we've been the beneficiary of
yeah,
that offshoring. I mean,
right,
inflation in this country has averaged 2.5% for the last 20 years,
which is
so,
unheard of. Like
which
that's
is
just phenomenal.
unheard of.
Yeah,
And so we benefited from that. And, the question, look, I'm a fan of bringing manufacturing onshore. I think we need to understand that that's not a free option. I mean,
right,
people in factories in the United States are making, 20 times what they're making in Vietnam and China and other
right,
places. So, I mean, that is inflationary.
right.
And so I don't know where we're going to end up. I do hope that, the leadership knows what they're doing, and time will tell in that regard. But it's definitely disconcerting. I will say that.
Yeah. Well, hey, thank you so much. You know, let me ask you this: when you uh, look back on your career and the trajectory that you took, um, are you glad you didn't become an attorney?
Oh, absolutely, yes.
Okay, you enjoyed building things up and uh, expanding things and watching things grow.
Yes. What I would say is, I spent of my 40-year career, David, I spent 30 years as an advisor, an investment banker, and
Hmm.
I spent the last 10 years as a principal. And growing Phillips Edison from a $700 million enterprise when I joined it to a $7 billion enterprise today, so 10x. And that was a lot more enjoyable. And if I got a mulligan, what I would say is that I wished I'd made the transition from an advisor to a principal earlier in my career than I did. But again, I learned a lot as an advisor that I was able to apply in my principal career. So at the end of the day, it all worked out well.
That's excellent. Excellent way to cap this off. Well, Devin, thank you so much, sir. Thank you for your time. I know you're incredibly busy, and I really, really appreciate your insight. And we look forward to staying in touch.
Great. Thanks for having me, David. Take care.
Thank you.